May profits be upon you. Hey, hey, hey. Hope you're having a great weekend. Let's take a look at pound yen. Pound yen. The previous video was on pound USD. It's a similar situation, but the price action is a little different. All right. That's why I'm starting off here at the weekly. Check this out. You see the range that we're in? You can see we're at the top here, at the bottom. And what you want to do when you're in ranges, you want to play the extremes. You want to buy here and sell here. Buy, sell, buy, sell, until that range is broken. Then when we see a breakout of that range, then we'll go with who's in control, demand or supply. You know what I'm saying? So share that a little bit with you there. Now, what does this say as far as the price action? We see this bullish impulse. All right, and on the weekly, and as soon as the impulse is here, we see this corrective action here. Now, what I want to see is where's the top, where's the bottom of the trading range, and I want to mark that, right? So far, that's what we're looking at. All right. I was here until we started doing this business. Okay. Now, what I want to go, where do I want to go? I want to go to the daily. The daily gives us some nuts and bolts. Right. All right. What I want you to notice is how price comes up, makes that high, higher low, higher high, higher low, higher high. Great. All right. We have the top of the trading range to this point. All right. Now, what we got to acknowledge is where are the strong highs and lows? Well, if we mark this zone of demand, that should be blue. Hello, hello, hello. There you go. All right. If we mark that zone of demand, we can say, hey, is this a strong high or a strong order block here? All right. Well, it broke structure. The answer is it broke structure, man. It broke structure to the top side. All right. Very strong impulse. A pullback and a higher low made and breaking the structure. Yeah, this is a goodie. All right. You stretch this. You stretch that, man. And you see how many times it was mitigated. 1, 2, 3, 4. And you're going to look at this one and say, hey, man, didn't it hit, didn't it go through the bottom a little bit? No. Yeah, it did. I said no. Yes, it did. But what you need to notice, hold on. No, I don't like a mess here. Why won't you go away? What is this about, man? Thank you. All right. What you want to notice is that it wicked. This is a liquidity spike. This is a liquidity wick. All right. And it comes down to take out the low. It comes to take the liquidity of that low and then goes back up. It respected the order block is what I'm saying. What you have to wait for is a close below these order blocks. That's what violates these order blocks. All right. At least, with the strategy I use anyway. All right. So we see the respected or mitigation, the mitigation again and again here. How many mitigations can this little doggone the order block that could? All right. The demand is so strong, it propels price to break new highs. All right. And what are we going to record? What are we going to record here? This order block. We're going to record this order block. It came up, snapped here, boom, right? So this is a very strong order block. This is a strong low. Get my point? Good, because that means it's tradable. Keep that in mind. It comes down, pow, right? Now, we're going to record this order block up here, this supply zone, because it's a new high, and we want to see, will that high break this low? Will that high break this low? If that high breaks this low, that's strong. That's pretty doggone strong. All right. If it doesn't, then we're going to bear in mind this is vulnerable. So in order to take a short from here, because we can see we have a mitigation of this order block here. All right. In order to take a short from there, we want to make sure we have confluences. All right. It won't be just a tap and go. And here we go. You know, it might come up further in here. We want to make sure that we see what we need to see as far as on the lower time frame. We want to see a change of character where price shifts from bullish momentum to bearish momentum, right? Anyway, price makes its way down, all the way down. We come back to this order block. Boom, this is where we would take our long. It did not take the doggone liquidity from there, all right? That's why we have this symbol here, because it's representing relative equal lows. This is a price magnet. So the next time price comes down here, look how far into this order block price came in to mitigate. You can kind of say there's no more orders left. So if price, this is a weakened order block, all right? If price comes through here, no more buy orders in here. This is probably gonna right through, okay? Now, let's get up here and let's get down to it, all right? Oh my gosh. Price found its way up here. We have this continuation patterns here. Bullish, bearish, bullish, bullish, bearish, bullish. This represents a form of demand, but these aren't very strong order blocks, all right? You look for reactions here, all right? I wouldn't necessarily take a sell from here because one, it's not at the extreme. Two, they aren't very strong looking, okay? So as price comes down in here, let's go to the 4 hours so we can get some more detail on this. As price mitigates this order block up here, and it mitigates well, we see we're going to take note of the price action. All right, we have this higher high, higher low, higher high. This higher low is responsible for that high, right? And price breaks it. What are we expecting after a break of structure? A break of a structural point, a return to impulse. Boom, right? High probability trade here. Price comes down. Great. All right, that was a great trade. All right, we break the low here. All right, what are we going to do? What are we expecting? We break that low. What are we expecting? A return to impulse. Are we looking for this impulse or the originating impulse? Because that's 9 out of, not 9, I would say 7 out of 10 times is coming back to the order block that sent this one down, not this one. Sometimes it takes this one first. You always look at the ones that are most close, the closest one to price first, the furthest one second. All right, sometimes these run interference, okay? So price does come back to the originating order block up here. All right, and we have what you call a supply zone here. All right, reacts, mitigates, drops, breaks this low, breaks that structural low. Hey, so what are we expecting? Maybe a return to impulse, right? But what happens? We run into a demand zone here. This is where things get interesting. Price runs into the demand zone, reacts. And remember, I was telling you about the reactions and the previous videos, today's videos, matter of fact, Dixie and Euro, USD. We look for that reaction, right? And price reacted, came up and took out the liquidity here. That's important. From a demand zone, we want to see that taking of liquidity here, because this is a potential flip zone. We might be developing a potential flip zone, and you want to see that reaction take some liquidity, okay? So what happens here? We take the liquidity, we see a pullback, and then the formation of another order block here. All right, now we have this order block boxed out, right? so that we can see it, and it's obvious because it's so proximal to this demand zone. We want to see if price will crash it, crash it, crash it. Well, it does crash. We finally get the demand zone to relinquish control to supply. Aha. So what does that mean? What broke the demand zone? What broke it? We're looking for the impulsing, the originating impulse that broke this order block. That is a tradable order block. Now, with all this here, it kind of muddies the water a little bit. So I'm marking out here, and I'm also marking out this one. Now, this is, you see how price came up in here and mitigated here. So we got two areas to watch. We got two areas to watch, really. This one and this one. All right. If price comes back, we're going to see if we get a change of character here, where price shifts from a bullish momentum to bearish momentum. We're going to look for the same here. If this doesn't hold, if this order block fails, we're going to look for it here. Okay. And that's it. That's it. Those are our POIs for pound yen. I hope you enjoyed this video. If you did, smash that like button. All right, because it helps the YouTube video algorithm. All right, and it also helps to build my channel. And I would really appreciate it because I appreciate your support. If you have a request or if you leave some feedback, leave something in the comment section, man. Let me know what you want to see. Maybe you want to see something else broke down, a different market. Okay. And I'll do my best to respond. I respond to all of my my subscribers and my viewers' comments, and I appreciate your feedback. Guys, take it easy. I will see you in the next video.